Hi, I am Yoni Zofian. I work for IGS in our commercial industrial sales department. It's currently the last week of February, and it's an awesome time to be talking about the NYMEX, the natural gas futures market, which really helps control the natural gas prices and electricity prices. The reason I say it's such a great time to be talking about it is because it's such a unique time with a lot of offsetting things happening right now. Currently, we've got the March contract. The March 2019 prices are trading, but they're about to finish trading, and then April becomes the prompt month, or the first month trading on the NYMEX. The NYMEX is a futures market, so we'll look forward to April here shortly. What's really interesting is at the same time that we're transitioning from the March futures contract to the April futures contract, from the winter futures to the spring or summer futures, it feels like winter outside. And if I look at these, the forecasts that are recently coming out, the 6 to 10 day forecast, 11 to 15 day forecast, they're cold. They're so cold that the entire map of the country, at least the lower 48 or almost 46 states, has deep navy blue on it. That means it's going to be cold out. And what's really interesting is we're not seeing natural gas prices run that much higher. They're still trading, as of today, in their exact same range that they've held for the past month, the entire time March has been trading as that prompt month, as the first month on the NYMEX. The question really is why and where do we go from here? Let's try and address that in two parts. The first one is why. Well, we've got kind of offsetting things. On the one hand, we've got this cold weather, and the cold weather is going to mean storage inventories are going to deplete a little bit more than we expected, right? People are going to use more natural gas, consume more natural gas to heat their homes in early March than we probably thought. That's going to reduce our amount of gas in inventory, or at least we would think. The reason I say we might not think that is because on the other side, we've got daily natural gas production happening. And we're doing that at about 8 BCF per day more than we were last year this time. So yes, we might be consuming more than we expected, but we're also producing more than we thought. And what's happening in the market is it's basically offsetting each other, and nothing's really happening. We're trading between this range of 255 to 290 for the March contract. And yes, we're trading near the upper end of that range as this weather's coming, but we haven't broken through it. We're not higher than $3. We're in very affordable, stable price environment right now. The question then becomes, we shift from not what our price is happening today, but what's going to happen over the next couple months as we get into April and May and June, as we get from February into March and April specifically. That's where we've done some really cool analysis. We've gone and looked back and said, look, there's a lot of rumors in the industry right now that once you shift from winter to spring, prices are going to automatically drop because that fear of the winter is gone. And so prices are just going to automatically fall. Not the case. We went back and looked at the past 18 years worth of data to see what happened between February and March and April. And what's really interesting is that 13 out of those 18 years, the prices actually increased, from February through April, and only 5 times did they drop. Last year being one of those, but it seems like it may have been the exception and not the norm. We took a little deeper dive and said, when did the lowest prices occur and when did the highest prices occur? February had the lowest for those 3 months, February, March, and April. The lowest price for the 12-month strip occurred 10 times in February. It only occurred 6 times in April. On the other hand, February had the highest price 7 times. April had the highest price 10 times. Basically, we're at 50-50. It's a toss-up whether or not the higher price is going to be in February or in April. We don't know if prices are going to increase or decrease. So our advice at IGS is let's not get caught up in a spring rally or a spring dip. Let's focus on where prices are right now. Are they affordable? Are they in a good price range? The 1 month price is trading around 290. The 12-month price is trading lower than that, and it's right around the 270-ish area. And the 36-month 3-year rate for NYMEX is trading right around the exact same 270 rate. We look at that and say we've got some really attractive pricing for a 1-year strip, for a 3-year strip. This is a good time to lock in. So if it's within your budget, let's skip the discussion around spring rally or spring dip, and let's look at what's actually happening in the market. And what we see in the market right now are some pretty attractive prices, especially long term. Thanks and have a great day.